Hello everyone! Today, we are diving into something super important for your small business in the USA. We are talking about bookkeeping. Think of it like keeping a diary for your business's money. It is the process of recording all the financial transactions your business makes. This includes money coming in and money going out. Every single penny needs to be noted down. Good bookkeeping is the foundation of a healthy business. It helps you understand where your money is going and where it is coming from. Without it, you are essentially flying blind. Bookkeeping involves tracking all your sales and purchases. You need to record payments you make to suppliers and receive from customers. This systematic recording is the heart of bookkeeping. It is not just about numbers, it is about creating a clear story of your business's financial journey. This story is written day by day, transaction by transaction. It ensures accuracy and provides a reliable source of financial information for your business decisions. These records form the basis for all your financial reports, like your profit and loss statement and balance sheet. Without accurate bookkeeping, these reports would be meaningless. Bookkeeping is often confused with accounting, but they are slightly different. Bookkeeping is the recording part, while accounting involves interpreting this data. Now that we know what bookkeeping is, let's talk about why it is so important for small businesses in the USA. Think of bookkeeping as your business's best mate. It tells you the honest truth about your financial health. This honesty is crucial for making smart decisions. Good records show if a product is selling well or if expenses are too high. This helps you adjust your strategy and manage cash flow. Good bookkeeping makes tax time less stressful and helps secure funding. Clean, accurate books inspire confidence in lenders and investors, especially in the competitive US market. Alright, let's get practical. How do you actually start doing bookkeeping for your small business in the USA? The first step is to open a separate bank account for your business. This is super important. Do not mix your personal finances with your business finances. A dedicated business bank account makes tracking income and expenses much easier. All your business transactions will be in one place. This simplifies record keeping immensely. Next, you need to choose a bookkeeping method. You can use manual methods like spreadsheets or specialized bookkeeping software. For beginners, software can be very helpful. Many programs are designed for people with no prior bookkeeping experience. They can automate many tasks and generate reports for you. Once you have your bank account and chosen your method, you need to set up your chart of accounts. A chart of accounts is simply a list of all the categories you will use to classify your transactions. The final step in setting up is to decide how often you will do your bookkeeping. Will you update your records daily, weekly, or monthly? For small businesses, doing it more frequently is usually better. Daily or weekly updates prevent things from piling up and ensure your financial information is always up to date. Schedule regular time in your calendar for bookkeeping. Popular software options in the USA include QuickBooks, Xero, and FreshBooks. Let's talk more about the tools and methods for your bookkeeping in the USA. You have a couple of main options. There is the traditional manual method, and there is the modern digital method using software. The traditional method often involves using paper ledgers or spreadsheets like Microsoft, Excel, or Google Sheets. This can work for very small businesses with few transactions. If you only have a handful of sales and purchases each month, a simple spreadsheet might be enough. It is low cost to get started. However, manual bookkeeping can be very time-consuming. As your business grows, it becomes harder to manage. There is also a higher risk of making errors. On the other hand, digital bookkeeping using software is often a better choice for most small businesses in the USA today. There are many excellent bookkeeping software options available. Think about Xero, QuickBooks, or Zoho Books. These programs are designed to simplify bookkeeping. They can automate many tasks, like importing bank transactions. They can also generate financial reports with just a few clicks. This saves you a huge amount of time and reduces the chance of errors. While bookkeeping software does have a cost, it is often a worthwhile investment. The time you save can be spent on growing your business. Section 5. Sorting your pennies, categorizing income and expenses. A crucial part of good bookkeeping is categorizing your income and expenses correctly according to USA tax regulations. Remember that chart of accounts we talked about setting up? This is where it comes into play. Every time money comes into your business, it is income. Every time money goes out, it is an expense. You need to assign each transaction to a specific category. This helps you understand exactly where your money is coming from and where it is going. Let's start with income. You might have different sources of income. For example, if you sell products, you will have a category called sales revenue. If you provide services, you might have a category called service income. The key is to be specific enough to be useful. Now, let's look at expenses. Businesses have many different types of expenses. Common categories include rent, utilities, office supplies, and marketing and advertising. Why is this categorization so important? It helps you analyze your business performance and is essential for your tax return. Properly categorized expenses make it much easier to claim everything you are entitled to under USA tax regulations. Section 6. Real-world examples, making sense of categories. Let's make this even clearer with some real-world examples. Imagine you run a small online bakery in the USA. Your income categories might include cake sales, cookie sales, and perhaps delivery fees charged. When a customer buys a birthday cake for $40, you record $40 under cake sales. If they also pay $5 for delivery, that $5 goes into delivery fees charged. This separation helps you see how much you are earning from your products versus your delivery service. Now for expenses in your bakery. You buy flour, sugar, and eggs. These would go into a category like cost of goods sold or raw materials. The electricity you use to run your ovens would be categorized under utilities. The money you spend on Facebook ads to promote your bakery would be marketing and advertising. If you pay for a stall at a local market, that is market stall fees or events. The packaging you buy for your cakes and cookies would be packaging supplies. Each of these distinct categories helps you track where every penny is spent. Most bookkeeping software will help you set up and manage these categories. Section 7. Keeping it tidy. Top tips for maintaining your records in compliance with USA standards. So you have set up your bookkeeping system. You are diligently categorizing your income and expenses. Now, how do you keep everything neat, tidy, and compliant with USA standards in the long term? My first tip is to be prompt. Record transactions as soon as possible after they happen. Do not let receipts pile up in a shoebox for weeks. Make it a daily or weekly habit to update your books. This regular attention keeps things accurate and up to date. My second tip is to keep all your supporting documents. This means every single invoice, receipt, and bank statement. Store them in an organized way. You can use physical files for paper documents or scan them and store them digitally in the cloud. Another important tip is to reconcile your books regularly. Reconciliation means comparing your bookkeeping records with your bank statements. This helps you spot any errors or discrepancies. Finally, consider getting help if you need it. Investing a little in professional advice can save you a lot of time, stress, and potential mistakes down the line. Section 8. The Taxman Cometh, Bookkeeping and Tax Compliance. Now for a topic that often causes a bit of worry: taxes. Good bookkeeping is essential for tax compliance. The IRS requires accurate financial records. These records calculate your tax liability. This includes income tax, corporation tax, and sales tax. Proper books are crucial for accurate tax returns. Well-maintained records simplify self-assessment. Accountants need organized records to prepare returns. Correctly categorized expenses ensure all tax deductions. Sales tax registration makes bookkeeping even more critical. Keep detailed records of collected and paid sales tax. Errors in sales tax records can lead to penalties. The IRS can audit your tax affairs. They will want to see your bookkeeping records. Good bookkeeping shows diligence and transparency. Section 9. The Big Payoff. Why good bookkeeping means business success in the USA. We have covered a lot today, from what bookkeeping is to how to manage it and its tax implications. So, what is the big takeaway message? It is simple. Good bookkeeping is not just a chore. It is a powerful tool for business success in the USA. It provides you with the financial clarity you need to make informed decisions. It helps you understand your business's performance. You can see what is working well and what needs improvement. This knowledge empowers you to steer your business in the right direction. It helps you grow sustainably. Think about the confidence that comes with knowing your finances are in order. No more sleepless nights worrying about cash flow. No more panic when tax season approaches. With good bookkeeping, you are in control. You can plan for the future. You can set realistic financial goals and track your progress towards them. This proactive approach to financial management is what separates thriving businesses from those that struggle. Moreover, good bookkeeping builds credibility. It shows your bank, investors, and even your customers that you are professional and organized. The effort you put into maintaining accurate financial records will pay off many times over in the USA.